Right now in the news, we're hearing about three things, and three things only: COVID, Britney Spears, and inflation. As much as I'd love to talk about Britney Spears and COVID today, let's just talk about inflation, and specifically, is inflation good for real estate? Inflation is higher now than it's ever been in 40 years. We're hearing about this in the news right now. All we're hearing about is inflation, inflation, inflation. Not going to talk about the causes of inflation here now. I just want to talk about inflation as it relates to real estate, and is it a good thing? I think, as you'll see, the answer is yes, mostly. Inflation is mostly good for real estate. It really just depends on your vantage point and what your goals are. But I think for most people involved in real estate, looking to buy or sell and invest, inflation is generally a good thing. And here are a few reasons why. First, what is inflation? Inflation is simply the decreasing purchasing power of your dollar. The decreasing purchasing power of your dollar. When inflation happens, it takes more of your dollars to buy that thing or to buy that service. For example, I used to be able to buy a burger for $1. Now it costs me $2. Inflation. I used to be able to buy a gallon of gas for $2. It now costs $4. Inflation. Inflation means that the purchasing power of my wallet, the purchasing power of my dollar is now less. That's inflation. The primary way that inflation impacts real estate is that it increases the value of the real estate asset. That's right, inflation increases the value of your property. So as the prices of goods and things go up in inflation, so does your real estate. So the value of your real estate will increase during times of inflation. In inflationary periods back in the 80s, real estate increased 9 and 10% per year for a period of like 9 or 10 years. So inflation can be a very good thing if you own real estate during the inflationary period. Real estate also eats your debt. It eats your debt. What does that mean? The relative cost of your debt decreases. The relative cost of your debt, specifically your mortgage debt, decreases. Case in point, hypothetically, let's pretend that you purchased a house 29 years ago for, say, $100,000. At that time, your home payment was probably $400. So 29 years ago, $400 a month, think about it. That's a lot of money. $400 was a lot of money, and it went a long way. Now, fast forward to this year. Let's say that you're still making that $400 payment. Does that $400 payment hurt as much as it did 29 years ago? Not even close. $400 doesn't even really seem like that much money anymore, surprisingly. So inflation chews away at the value of your debt in that sense, which is a good thing if you have real estate debt. Number three, inflation also drives up rent. It increases the rents. So if you are an investor, if you're a property owner, if you're a rental property owner, this is a good thing because the rents will go up. Your renters will pay more money. And in fact, historically over time, the rate of the rental increases outpaces the pace of inflation. So the rentor continues to make money. Now, if you are someone doing the renting, if you're the renter, this is a bad thing, obviously, because the amount of money that you're going to be paying in rent is increasing. Word to the wise, buy a house. Don't rent if you can. Your rent is probably double what the mortgage would be. So get out there, stop waiting, and buy a house. On the downside, inflation usually increases your mortgage rates, your borrowing rates, and we're already seeing that. A couple of months ago, interest rates were down in the low 3s and high 2s. Now, with all of these inflationary pressures over the last couple of months, you're seeing numbers going up to the high 3s and low 4s. So, unfortunately, unless you're in the mortgage business, unfortunately, inflation does increase your borrowing rates. And for you investors out there, most experts agree that real estate is a great place to park your money and diversify as a hedge against inflation. During inflationary times like this, and we're already seeing this, the stock market can get twitchy, volatile, and uncertainty. As the inflationary pressures rise, so do the home values, so do real estate values. So it's a great way to diversify by putting your money into real estate, again, as a hedge against inflation. So if you diversify into real estate, you're seeing your investment value increase. You're seeing the rents, if you're a landlord, if you're an investor, your rent is increasing, the rent you're receiving is increasing. Your debt is being devalued, which is a good thing. And if you own the property, you're also enjoying the tax benefits, such as the deductions for depreciation, the deductions for the interest that you're paying, none of which you enjoy if you're investing in stocks. So it's a great way to diversify, especially in times of inflation. I'm Grayson Hoffman. I'm a real estate agent in Virginia with the Ashley Hoffman Group. If we can help you in any way or answer any questions, give us a call.